Good. What today is Monday, April 21st, 2025. Which update for Tuesday, 22nd. All right, let's go. Well, as far as official setups, let's stick with this UNM. As you can see tonight, still quite a few shorts in here. But given the nature of the market, I still like these ones that are at high levels. So let's just stick with this UNM for now. Okay, day overall in the portfolio. The AGI didn't get exactly super close, but it did get fairly close again to the IPT. We'll take a look at that in just 1 second. Initial profit target. So just make sure you don't split hairs on that one, given the volatility again of the market and everything else happening. Now UNM again looks like it's in trouble. This is when it's in the early phases of breaking down. This is what I would prefer at this phase of the overall market. And also insurance is a very similar pattern. Once again, most of these are at fairly high levels. A lot of them are, or some of them I should say, are kind of wide and loose and can be picked apart a little here and there. For now, let's just stick with that, and then let's see what the next bounce brings. Let's take a look at the portfolio real quick, and then we'll pop out, obviously, the overall market and drill down a bit. AGI, there it is. Once again, opening gap reversal right around this 31.25 is what we're looking for. So anything above 31 or close to 31 even, consider taking partial profits. Remember, the real money isn't the second loaf of the trade, the trending loaf, so to speak. CCL, nice little sell-off there, not a new low, so no need to adjust the stop lower on it. TPR, off its best levels, I should say, for us, or worst levels, depends on how you want to look at it, but still down a little on the day, better than the poke in the eye, I suppose. Let's take a look at the market and drill down. First of all, let's start with the P's. S&P 500 selling off fairly hard. Once again, down 2% and change. As I've been saying ad nauseum, looks like we want to come down here at the least and challenge the recent lows. When we get there, we'll see what happens. But there's no need to be a hero just yet. Other than intraday bounce, no need to buy the market. Nasdaq Composite, same sort of action happening there too. Down over 2.5% on the day. As you can see, death cross not that long ago. They are also a piece of death cross to the downside. Rusty death crossed a long time ago, way back here. Anyway, you can see Rusty selling off fairly hard out of that pullback down 2% on the day. Gold, the commodity, off to the races. Look at that, all-time highs there. Gold stocks are not really following suit. Up a little, but not quite as much as gold, the commodity. So again, especially since we're so overbought in these areas, such as gold, of course, make sure you lock and load if we get fairly close again to that profit target. E for share selling off fairly hard, so sort of no place to run, no place to hide. Speaking of no place to run, no place to hide, other than gold, obviously. Bonds got whacked in here, and I hate to use the word hope, but hopefully we find support at these previous lows. As you go through the sectors, as you would imagine, most are kind of looking like the market itself. Before we do that, just real quick, dollar remains weak. Euro strong, you can see brand new highs up in here, relative highs at least, multi-year highs. And then the pound also remains strong. And gold being dollar denominated, commodities in general are dollar denominated. That's putting helping gold go higher. As the dollar goes down, gold will go higher. Anyway, if you take a look at some of these areas in here, some got whacked pretty hard. There's health services. It was whacked especially hard today. The rest of them is kind of, we're back to kind of throw a dart mode. The rest of them, cybersecurity, semiconductors, list goes on and on. Kind of look like the market itself, selling off out of these pullbacks. You can see semiconductors selling off fairly hard in here. Not the end of the world, but obviously you want to see the market stop at some point. Still, that's 2.5%. It's amazing. Once you get in a volatile market like this, that doesn't look like 2.5%, does it? But it is. Anyway, some of these areas like insurance, again, are breaking down from these high levels. The few areas that are left at high levels are beginning to break down. So that's certainly, obviously not a good thing. Defense, after trying to rally back up, is beginning to roll over again. So that looks like a major top remains in place there. And again, throw a dart anywhere else. Cloud computing, sell it off out of a pullback. Let's take a look at energies. You can see sell it off fairly hard. You guessed it, out of a pullback. No need to bore you too much and go through the rest of them, but again, most areas remaining questionable at best, and most areas selling off hard out of pullbacks. Anyway, I think that's it for tonight. Everybody have a fantastic night. If you have any questions, you did a routine. Thank you so much.